Energy field. I was at a wedding yesterday. Didn't get home until like started. Oh, okay. So do I jump right in when we start?
Yeah, what time is it? We'll give it a minute. Are you sure you want to stop? Yeah. No, so we're recording. I think we're going.
Are we live?
Almost.
Okay.
It's almost 4 o'clock. Well, we're live.
We're live right now?
We are.
Oh. Hey guys. Thanks so much for attending our Cost of Waiting to Buy a Home webinar. My name is Keira Chatman, and this is my lovely co-host, Tim Bullock. And today we're going to have a really informal kind of webinar, just trying to figure out if buying a home is going to be for you, if it's a really good time. And we're going to go over some topics, but before we get there, I just want to make sure that you know who you are chatting with. So we're going to introduce ourselves a little bit, and then we're going to get into some topics and just kind of show you how the layout's going to be for the next hour. So a little bit about me. My name is Keira Chatman. Like I said, I was born and raised in Columbus, Ohio. I went to the University of Akron and studied fashion merchandising, and then went to Brooklyn, New York for about 8 years and worked in the fashion industry forever. You know, I did a little bit of buying, I did some wholesale, I did styling, I did merchandising, a little bit of everything, and I kind of tapped myself out of the fashion industry. Now, you know, I'm in full-time real estate. I actually did a little bit of real estate when I was living in New York, which is a completely different market there. But doing full-time real estate, I work with Millennium Group of Keller Williams Capital Partners, and I am a buyer's agent. So that means I work exclusively with buyers. Okay.
Awesome. So, as Keira said, my name is Tim Bullock. I work with the company I work at is Union Home Mortgage. I've been with Union Home now for 22 years. I don't know if you knew that. 22 years at Union Home.
Long time.
Been in the business for almost 25 years. Prior to this career, I was in banking, and then prior to that, I was a restaurant manager. So I've seen a lot. Never fashion merchandising. I've never lived in New York. I've lived in Ohio my whole life, and I love working with first-time home buyers.
Yep.
You know, that is our niche. 75% of my business right now on the lending side is working with those first-time home buyers. A lot of them are the millennials.
Yeah, definitely.
Yeah.
Same here. That's my main clientele is first-time home buyers. So I love working with you guys as well. So hopefully there's a lot of you guys out there today. So just to talk about the topics we're going to discuss. So we work with, like you said, first-time home buyers all the time. A lot of them have the same questions. So we're going to talk about the main things that we hear. We're not going to get to everything, but we're located in the Columbus area. So if you have any questions, feel free to reach out to us about anything particular. But we're going to talk about credit scores and why they're important, down payment options, the current market, what's going on right now, interest rates, any kind of financial programs available for first-time home buyers, any kind of worries and pitfalls that a lot of buyers experience before they buy the house, and then also some benefits of renting versus buying. So
yeah, I mean, the topic of this webinar is the cost of waiting. There is a cost of waiting to buy a house.
Yep.
Do you buy now or do you buy later?
Mm-hmm.
So a couple housewarming rules here, I would say. To your right, there's a chat box. So we'd love to hear some questions that you guys have. Why are you on this webinar? Shoot those questions over to the chat box, and we're going to try to get to them towards the end of the presentation. That's number one. Number two, house rule would be that at the end, if you stay to the very end, there's going to be a special prize, a special giveaway for you. So definitely have to stay to the end to hear what that is. And again, use the chat box. We'll go through those questions at the end. And this presentation will probably take about 40 to 45 minutes, and we'll leave plenty of room open at the end. And if you have to go for some reason, we're going to reach out to you with a recording of this webinar afterwards, and you can always follow up with us at that point with any other questions that you have.
Okay.
So, hey, how we came up with these questions was I actually sent an email out to 1,500 millennials asking them the question, what is your biggest worry about buying your first house? And I received about 30 responses back, maybe about 40 responses back, and 30 of them were actual questions that we could use for this webinar. We've narrowed it down to about 5 or 6. So that's sort of where these questions have come from. They came from people that we asked.
Yep.
So
go ahead and get into it then.
All right, sounds good.
All right, so let's talk a little bit about the first step in buying a home.
Yep.
So there's a lot of first-time home buyers. They're Googling, they're looking at Zillow, they're asking family and friends kind of what their process was, and everybody says something a little bit different.
Right.
So being, in real estate and being on the lender side, we kind of know what the first step is, and it's generally getting a pre-approval.
Sure.
So can you talk about what a pre-approval is, why it's important, and then also what's the difference between a pre-approval and a pre-qualification?
Yep, that's a great question. So the typical first-time home buyer, where do they start their search? They start their search online.
Yeah.
They go to the house because that's what they want to buy. They think that their first step is going looking at the house. And in reality, the first step should be getting pre-qualified, meeting with a lender, a mortgage bank, a banker, and going through that process of making sure that they're going to qualify. The last thing we want them out there is looking at houses and getting all excited about the process and then not be able to qualify.
Exactly.
So there's two words that we use. There's pre-qualification and then there's pre-approval. I'll talk a little bit about both of those, then I'll try to get your opinion as well, why it's important in the market right now.
Yep.
So pre-qualification would be, Keira, you call my office and you give me some information about yourself, about where you work, about your current situation. Are you renting? Do you own a home now? You give me some information about your credit and your debts. And then I tell you, hey, based on what you're telling me right here, you're good to go. Start looking at houses.
Yeah.
Okay? That doesn't do you any good, right?
Right.
Because we don't talk about loan programs. We don't talk about down payment, credit scores, things like that. Okay, that's what's called a pre-qualification. Years ago, that was fine.
Yeah.
Okay. Nowadays, that's not going to go anywhere.
Exactly.
So pre-approval is where we take it the very next step and we start gathering your information. We get your pay stubs, your W-2s, your tax returns, your bank statements, your driver's license. If there's a divorce, if there's a bankruptcy, we gather all this information. The more information we can gather up front, the better for the overall financial picture. So we're going to run your credit report. That's one thing we haven't talked about yet, but we're going to run your credit report to make sure that you're going to fit within the guidelines of the particular programs that we'll talk about here in a little bit. But so that's what a pre-approval is. It helps you get a better idea the types of loans that are out there for your situation, your down payment, what your monthly payment's going to look like, because that's the most important thing, right?
Definitely.
You have to write the check for the mortgage every month, not us. So I could tell you that you qualify for a $1,500 per month mortgage payment, but if your comfort zone is $1,000, we're catering that pre-approval based on your comfort zone.
Yep.
So that's what a pre-approval is.
Okay.
Generally, it's good for 60 days. Okay, because so much can change in 60 days.
It can.
You could change jobs. You can go get new debt. You could get a pay raise. You could lose a job. There's a lot that can happen within a 60-day period. So it's only valid for a certain amount of time. So that's what a pre-approval is on our end. How about on your end? Why is a pre-approval important from the real estate perspective?
So it's important to make sure you get a pre-approval, again, before you start the home search. But it also reiterates to the seller that you're a serious buyer. You're going to be purchasing a home for a couple $100,000 potentially. And the seller wants to know that if you put in an offer that is actually backed by some sort of financial, obligation, or you've tied yourself to a lender and the lender said, hey, like, we actually are okay with this person buying this home for $100,000+ dollars.
Right.
So the average home in Columbus market is around $229. So if a seller is going to accept an offer, they really want to make sure that that person, they're going to take the house off the market.
Yeah.
They're going to make sure that you are financially sound. That's why it's really important to get a pre-approval.
Okay.
And a pre-approval over a pre-qualification is just better because it's, we know that you did a little bit more due diligence up front.
Sure. So really the pre-approval is done for the seller of the property. Are all pre-approvals created equal?
I would say no. So definitely, making sure you get a really good, solid lender. Now, there's big banks and then there's local banks. So we always suggest on my team to go with a local lender. One of the reasons is going to be because local lenders they're local. They have an office, in the area. You can talk to them in the same time zone. Generally speaking, all their parts are in the same area versus a big bank, say for example Chase or something like that.
Sure.
You may need something right away and they might not be able to get it to you right away because maybe their part of their office is located in California. So just kind of making sure that you get with a local lender is really key, I would say.
Yeah, and I would say that a pre-approval that has, for example, our name on it, being in this area for 25 years, carries more clout than an online lender, let's say, for example.
Exactly.
So that's what I meant by pre-approvals are not all created equal.
No, they're not.
You can't represent the buyer properly if you don't know who the loan officer is, right? If you don't
Very
know who
true.
you're supposed to call.
Yep.
So,
Agree.
so that covers basics of what is a pre-qualification and what is a pre-approval. Another question we have here. Tell us about the market conditions right now. It's been up and down, and
It
where
has.
are we at right now in the market?
Yeah, so Columbus is a really, really hot market. And every market, it's important to know that all markets are different.
Sure.
So New York's market's going to be different from California, from Atlanta, from Columbus.
Yeah.
And markets can even be different on sides of towns.
Yeah.
So you can have a slower market in Reynoldsburg and a really fast market in Dublin, for example.
Yeah.
But right now we're coming off the heels of a seller's market, which means that really our inventory was very, very low.
Yeah.
And the sellers had the upper hand in all the offers that they were kind of getting. So it's supply and demand.
More buyers than sellers.
Exactly.
Okay.
So right now, say March through July, we were in a seller's market for sure. Low inventory, multiple offers, people going above list price, taking care of appraisal gaps and everything like that in between. So right now we're kind of shifting.
Okay.
So I'm seeing a lot of first-time home buyers come back onto the market because there was a lot of intimidation.
Sure.
In entering into a seller's market, not being competitive enough. So right now we have our inventories up.
Okay.
We actually just broke a 91-month streak
of
increase in inventory instead of decreasing in inventory.
Okay.
So that's really big. Right now, buyers have a little bit more negotiating power than they have before in the last 3 years or so.
Right.
So it's a really good time to buy because interest rates are low. You have more negotiating power. You don't necessarily have to go above list price if you don't want to.
Sure.
And if you're not in a competitive area.
Okay.
So kind of speaking of the interest rates.
Yeah.
How exactly do those tie into the shift of the market?
Yeah.
And what are you seeing right now as far as trends go?
Gotcha. Back to the topic we were just talking about. I grew up in Akron, right up the road, an hour and a half, 2 hours up the road.
Yep.
Akron earlier this year led the country in homes that were sold for over asking price. Okay. That's no longer the case right now. So I think buyers were getting frustrated because they found these homes out there, and the problem is 10 other people found the same house.
Exactly.
And now you're having to bid with 10 other people on the same house.
Yep.
And you're most likely not going to get that offer unless you're the strongest offer and unless you have that full pre-approval and all that. So
exactly. Yep.
So okay.
So for the interest rates, so what are you what's the interest rate right now?
Yeah.
And then how does that really tie into your mortgage payments and things like that?
Yep. So I've seen interest rates in my career as high as 8%. I've seen them as low as 3.5% for just a short period of time.
Yeah.
Historically, back in the 80s, when I grew up, interest rates were in the 12, 13, 14% range. So we're not going to see those interest rates anytime soon, nor will we ever, I feel.
Yeah.
They're on the trend. The trend past 6 months to 12 months has been they're steadily going up a little bit. A lot determines interest rates.
Yeah.
Your credit score determines your interest rates. How much you borrow determines your interest rates. The more you borrow, the better interest rate you get, because the bank can make more interest if you borrow $200,000 versus $50,000.
Right.
The type of loan, okay, and then again, the biggest factor is the credit score. So I can give you a roundabout figure of about 5% right now in interest rates.
Yeah.
I bought a home 9 months ago, and interest rates were about 4%.
Yeah.
So we've seen in the last year, 9 months to a year, a steady increase of about a full 1%.
Yeah.
How does that affect the consumer? So on a $200,000 house, that's going to affect the consumer by about $50 a month. Okay, just a 1% increase in the interest rates.
Yeah.
Where do I see them going in the future? I don't have that crystal ball here in front of me.
Right.
I can tell you what the trend is and what we're expecting. Mortgage bankers are expecting, and probably going to continue to go up a little bit higher.
Yeah.
So, and that goes back to the cost of waiting a little bit.
Exactly. It does, because I hear a lot of times, a lot of my clients will say, I'm just going to wait until next year. But they really don't have a reason as to why they're waiting.
Yeah.
They think that maybe the market's going to shift in a different direction. But again, we don't have the crystal ball.
Yeah.
What we do know is that generally interest rates go up.
Right. Yeah.
And that's what they're doing right now. So it does affect your mortgage payment.
Yeah.
So it's better if you are in a financial state right now to go ahead and buy while interest rates are low and you have some negotiating power.
Yeah, so that's one of the costs of waiting.
Mm-hmm.
Is that same home next year, if you did decide to wait and maybe set up a little bit more of a down payment,
Mm-hmm.
that same interest rate next year, a little bit higher, could cost you an additional $50.
Yeah.
The other aspect is that home value. Let's say that $200,000 home next year could be worth 205 or 210,000 just because of appreciation in the market.
Exactly. Yes.
So that additional $10,000 that you're going to pay for the house next year is another $50.
Mm-hmm.
So with this scenario, the cost of waiting would be about $100 a month because of interest rates and the market values of the homes out there.
Mm-hmm.
So that takes us back to the cost of waiting.
It does.
Should I buy now? Should I buy later? Should I try to save up a little bit more money?
Yep.
Not necessarily.
I agree.
So good. So we talked about the market conditions right now. We talked about interest rates. We've seen the trends in interest rates and the cost of waiting now. What are some of the things that first-time home buyers, what are some of their fears? Why are they holding off right now on buying their first house?
I think there's three main reasons that people end up holding off.
Okay.
So the first one, I really do believe is going to be finding out what your why is, or not knowing what your why is to move forward with buying, because it's a big purchase.
Sure.
It's probably one of the biggest purchases you'll ever make.
Yeah.
And if you don't know why you're looking to buy, if you just think it's societal pressure or something like that, or your best friend just bought a house, that might not be the best reason to buy. But if you actually want to build equity, you want to start a family, or you want to have some value and appreciation.
Right.
That's a great reason to buy.
Okay.
So really just kind of determining what your why is going to be and what your timeline is like.
So not everybody should buy a house.
Not everybody should buy a house.
There's a lot of other factors that come into play when you buy a house, right?
Mm-hmm. Yeah, for sure. Like there's repairs and everything like that. So you have to budget for those things.
Mm-hmm.
The benefits, we'll talk a little bit about the benefits of buying, but
right, yeah.
for sure, not everyone needs to buy. If you're going to be traveling a lot, you'd like to move every 2 years, you just like to change it up. Maybe buying a primary home isn't for you, but maybe an investment property is where you can rent it.
Keep it for long term.
Mm-hmm.
Yeah, because if you only keep it for 2 years and eventually need to sell it, you have fees every time you sell a home or buy a home. Mainly on the seller side, but so you have to have time to be able for the home to appreciate in value to make up for what those costs would be to sell a house.
Exactly. Yep.
Okay.
Another holdup is going to be, the fear of the unknown.
Yeah.
So it's kind of like when you go out to a restaurant and you spend a little bit too much money the night before.
Yeah.
And you're afraid to kind of check your bank account. But you really do need to check your bank account because you need to know what's going on, right? It's just like that when it comes to buying a home. So don't be afraid to check in with a financial advisor or a lender.
Yeah.
Or really just tap into your bank account, finding out what your credit score is, and talking to a lender to see what the steps are you need to take to actually buy a home. If that's one of your goals, you need to know what kind of plan you're going to put in place.
Right.
Instead of just kind of maybe talking about it, let's plan it out.
Yeah.
That's another one. And then I think the other one is just kind of not knowing how the industry is really supposed to support you.
Okay.
Now, again, we're going back to kind of like Google and Zillow and friends and family. Everybody has an opinion about a realtor, a lender, a home inspector. And I think this is kind of coming off of the market, like where we crashed, in 2008. It
was our fault, right?
Yeah. And there's a lot of skeptics out there as to like, who's on your side?
Yeah.
So I think a lot of people should have a little bit more trust in the process.
Yeah.
Making sure that you're finding a really good realtor.
Mm-hmm.
I'm a buyer's agent, so my primary job is to be on the buyer's side and to take care of my client.
Okay.
So you have to find a good realtor that's going to, have a good reputation, have reviews, and then trust their opinions and their resources, knowing that, hey, they want to get this done with you.
Right.
So they want to get it done the right way, generally speaking. I would definitely look into the lender that they suggest, look into the home inspector that they suggest. They're suggesting those people for a good reason, probably because they worked with them before.
Yeah.
And they have a good reputation as well. Good people work with good people generally.
That's why we have 135 Zillow reviews right now, 5-star Zillow reviews. It's the importance of consumers going online nowadays, and they're doing a lot more research than they used to.
Yes, they are.
They're researching us ahead of time.
Yeah.
We've always been thought of as being salespeople, right? And we're
Mhm.
not really salespeople. We build relationships and we help people
Yep.
make the biggest investment that they're going to ever make in their lifetime.
Mhm.
Two of the things that we do, going back to what you're talking about earlier, is we help a lot of our borrowers fix up their credit to put themselves in a position to be able to buy.
Yeah.
Half of the people that I talk to don't qualify right now because of credit or job or things like that.
Yeah.
And I never say no to anybody. I say no. I don't say no. I say not now.
Mhm.
But here's what you need to do. Here are the steps that you need to take.
Yeah.
And then
It's so
after
key.
after they buy the house, we do financial, personal family budget workshops for our past clients to make sure that they stay on track, to make sure that they're budgeting to pay their mortgage off sooner
Mhm.
and building equity faster so they can retire sooner and save up a lot more money.
Yeah.
So it's not all about interest rate to us.
Right.
Okay, it's about the bigger aspect of owning a huge asset like a home
Mhm.
in our world.
And that's a really good point because I think people think lender equals interest rate and that's it.
Yeah.
And I think people think realtor equals opening doors.
Yeah.
And really, realtor equals negotiating
Oh my gosh.
contracts and really just kind of being a resource throughout the whole entire transaction.
Yeah.
So you really should be leaning on your lender and your realtor at the same time to make sure you're on track.
Yeah.
And again, another thing that's a misconception is a lot of people think that realtors, as soon as you get on the phone with them, you have to start paying them. We're hourly.
Yeah, it's true.
Which is not the case. We're not lawyers.
Right.
So we actually don't, our commission isn't paid until the job is done.
Yeah.
And it's generally in Columbus, it's paid by the seller.
Right.
So it really is to your benefit to make sure that you're consulting with a realtor
Right.
and using their resources when you're really starting to plan.
Yeah. And I think the important part of this is, I know you guys do this on the team, is you meet with your buyers for consultation ahead of time. Before you start showing them houses, how are you going to know what to show them unless you know a lot more about them, what they're looking for, what their why is, like you were saying.
Yep.
That's one big thing that you guys do there. Before you probably even get the pre-approval finished, you're going to meet with them and make sure that you know. And I know you don't show, your buyers, I know you're not showing them 20, 25, 30 houses because you knew more about them from the get-go.
Exactly.
I think that's key. Not a lot of realtors do that, I think.
I definitely know a lot that don't do it. But it's so important, like you said, because I think a lot of times people think, you're watching HGTV and you're thinking you have to go into 1,000 different houses. But when you take the time and you sit down with your realtor and you really figure out what you need and there's a common understanding of goals, we can make that process a lot faster and smoother for you.
Sure.
Because nobody really likes to go and see 60 houses. That's really, that can beat you down.
Right.
Especially if you're putting in offers and you're not getting them.
Right.
You're not getting the house that you want. So really what you want to do is be strategic in the whole process.
Yeah.
Let's find out what you really like. Let's figure out the neighborhoods, the price points. Let's get you pre-approved. Let's get you all lined up so that when you walk into the house that you really love, you're in a position to buy it.
Expectations. So that's key with our pre-approvals. We spend so much more time on the upfront part of it.
Yeah.
But I like to sit down with my borrowers, make sure that we spend about an hour and a half going over all that. So that way when they're out there looking at houses with you, they don't really have any questions about price ranges, monthly payments, things like that. I'm there for them if they find a house and they want to go over some payments and things like that. I'm there to answer those questions. But if I've done my job correctly up front, spent that time with them, we don't need to do those kinds of things because they already know what they're doing.
Agreed.
Okay.
Yep.
Borrowing money is a stressful process. We want to get all that out of the way ahead of time because it's fun to go look at houses.
It is.
Right? Because people do it on HGTV all the time.
They do. So. It's fun to look at houses when you're all lined up and you're ready to go.
Yeah.
But when you still have it in the back of your mind, like, oh, I don't know if I can afford this. I don't know if the monthly payment fits within what I need to do. It can be more stressful than fun.
Sure,
You might be wasting your time.
Yeah. So, I know realtors that will tell their clients, I'm going to show you 10 houses. Any more than 10, we don't find your perfect home, you need to fire me as your agent.
Yeah.
Okay. I think that's a good idea, not for everybody, obviously, because everybody's different. But the thought is, I'm not doing a good enough job for you. I didn't ask enough questions up front. So
that's a good point.
So yeah.
Yeah.
Good. All right. What else do we got here?
So let's see. All right. So we know that you have to get a pre-approval. We know that credit and down payment, it comes into play.
Yeah.
With getting a pre-approval. What are some of the programs that first-time home buyers can get to help them buy their first home?
Okay. So the media makes it sound like, and I'm looking at the chat box here to see if we have any questions. Looks like a couple are coming over, so
Yeah.
we'll get to those here at the end. The media makes it sound like it's so difficult to get a mortgage these days, that you have to have 800 credit scores, you have to have perfect credit, and you have to have 20% down payment to buy a house.
Yep.
Not the case.
Yeah.
Okay.
That's a big misconception.
Yeah. So don't have that misconception out there. You don't need to have perfect credit scores, and you don't even need to have a down payment. So there are programs out there where a first-time home buyer can buy a home with no money down.
Yep.
Okay. So it could actually be cheaper to go buy a new house than rent.
Mm-hmm.
When you rent, you have to pay the first month's rent, first month's security deposit. Okay, that could be a couple $1,000s.
Yep.
You can get into a home with some of these first-time home buyer programs that we're going to talk about here for under $1,000. Okay, and have all the benefits that we talked about. Exactly. Exactly. So what are some of those programs?
Yeah.
So one program that would be no money down would be if you're a veteran. Okay, you don't have to be necessarily a first-time home buyer, but veterans who are eligible can buy a home with no money down using the VA loan program.
Yep.
That would be one. Another one would be the USDA, U.S. Department of Agriculture. They have a program for buying homes in rural areas, not farms and things like that, homes that are in rural areas for no money down.
Yep.
Okay. Each of these programs are going to have income guidelines. You can't make too much money and still qualify for some of these programs. They try to leave these for the people who actually need them.
Right.
Okay. So that's another program there. And then the state of Ohio has a program that will help consumers with down payment assistance. Ohio Housing Finance Agency, and we've worked with this program for the last 20-some years, since the 80s when it first came out. It'll give a 5% down payment assistance grant to first-time home buyers who qualify.
Nice.
Okay. In essence, your whole down payment is covered. Whether you're doing a 3.5% or 3% down home loan program, you're getting 5% from the state of Ohio. Your down payment is completely covered. Okay. Some of the criteria for these programs, like I said, is income limits. The income limits are based on how many people are in your household.
Yeah.
Okay. The bigger your household, the higher the income limits are. Okay. And then the second criteria, there's 3 of them. The second criteria is you have to be a first-time home buyer. Do you know what makes a first-time home buyer? What's the guideline for first-time home buyer?
You know, I think isn't it every 2.5 years or 3 years you can be a first-time home buyer?
3 years.
Yeah.
Yeah. So if you have not owned a principal residence within the last 3 years, you're considered to be a first-time home buyer. Funny is, you could actually have owned a home and lost your home in a foreclosure. You have to wait 3 years for lending guidelines, and you'll actually then qualify as a first-time home buyer again.
Yeah.
And I've had people do that before, unfortunately and fortunately.
Yeah.
So that's another criteria. Credit score then would be the third criteria for first-time home buyers. When you're getting down payment assistance, okay, from a lending standpoint, they're riskier types of loans.
Yeah.
We got caught in this 10, 15 years ago where we were lending money with no money down and to people who didn't have really good credit scores, who didn't have money in the bank for reserves, just in case something went wrong with the house.
Yeah.
The minute they lost their job or the minute something happened, they couldn't afford the house anymore. So we're getting smarter as we go through through this. But a minimum credit score, like for a first-time homebuyer program, would be 660 with the state of Ohio program.
Okay.
640 for a USDA program, and so forth. But you need to have a little bit better credit with those programs because you're not putting any money down.
Right.
So those are some of the programs that are out there. There are some county programs that are out there. In Columbus and Akron and things like that, there's some county programs that are available. Generally, the state of Ohio program is probably the best one that we've found.
Yeah.
There's some home buyer education that needs to be done as well. We want our consumers, our borrowers, to go through some type of first-time home buyer class.
Yeah. That makes sense.
Other than this one right here.
Yeah. And that's a good idea because a lot of people don't know what they're jumping into.
I had one of my borrowers tell me yesterday, "Thank you for making me go through that class." I didn't make him. He had to go through the class to be able to get the down payment assistance, but he loved it. He just loved doing that, the budgeting piece of it and things like that.
Yep.
Because the average consumer doesn't think about doing a budget.
No.
Okay.
Yeah, and it's a really important step in buying. You know, when you're buying a home, it's not just for your family and things like that. It's part of the stability of your family, planning, budgeting.
Yeah.
You know, not just living there and painting walls.
Yeah, exactly. Exactly. Are you going to be able to save up money for your retirement? If you like to give money away to charities, are you still going to be able to do that?
Yep. Keeping your lifestyle.
Exactly. Exactly. Now you may have to eat Roman noodles or whatever for a little while to get adjusted to it.
And that's fine.
But it's part of the process.
It is part of the process.
Yeah. Well, good.
So kind of going back to credit, if somebody doesn't have a 640 or a 660, are there like any quick fixes for them to bring their credit score up in a short amount of time?
Yeah. So sometimes there are. Sometimes you could do it within a couple days. The credit reports that we use give us our consumers' credit score, and then they also give us their potential credit score.
Okay.
So I can see that consumer's credit score right now, for example, is a 580. And I know with an FHA government loan, we need to be at least a 600. But then I see the potential is 620.
Okay.
So then I can do an analysis, and it'll tell me step by step what the consumer needs to do.
Oh, nice.
Sometimes it's paying down credit cards. Okay. A big part of your credit score is the utilization of your credit.
Yeah.
So if you got all your credit cards maxed out, that's not a good sign.
Right.
So they're going to ding you on your credit score. So you can maybe spend $500, $1,000, pay down all your credit cards to under 30% of their limits, and you could see your credit score go up 10, 15, 20 points.
That's great. And you shouldn't close credit cards, right?
Correct. One of my consumers did that the other day. I said, that's like the worst thing that you could ever do.
Yeah.
The minute you close your credit card, all that good history goes away. So I can understand that you don't want to have that credit out there. The best thing is to do is pay it off, maybe keep a minimum balance on it, use it every month for gas or groceries, and that's it. Never make the balance, have it never go over 30% of its limit, but keep it open for sure.
Yeah. I think that was a mistake that I made in college. I had a lot of credit cards and I used them all up. I maxed them all out. And then I paid them all off once I graduated college. And then I closed them. So, and that definitely, my credit was just like, it was just beginning and it was just ending at the same time.
Exactly.
So that was a lesson learned on my end.
And it's a lot easier for credit scores to go down. They go down a lot faster than they do go back up. Sometimes it's just time. Sometimes you have to pay down your credit cards, maybe open up a new credit card, and then wait 3 to 6 months. Or possibly a collection of things like that. So consumers think they immediately, if they pay off a collection on the credit report, that's going to help their credit score. Not the case sometimes. You can pay off a collection. Let's say it was a collection from 5 years ago. It's so old that's not even impacting your credit scores. The minute you pay it off, now it has an updated date on there. Now it appears to be a paid, updated collection. It's going to hurt your credit score. So before you do anything like that, it's good to consult a mortgage banker or somebody that knows something about credit scores.
For sure.
So
I agree.
Yeah, exactly.
Okay, so what else do we have?
We talked about the equity and buying on the financial side, buying a house where homes go up. Let's talk about this a little bit more. So when you buy a house, one of the huge benefits is you're funding your retirement.
Yes.
What do we mean by that? So let's just simplify this. Let's say you buy a house for $100,000. Okay. And you have to put a 3% down home loan for, you put 3% down, so you're investing $3,000 into a house. Okay, that same home next year that was worth $100,000 this year, next year is going to be worth how much? $105,000. Let's say on a 5% appreciation. So that asset that you had went from $100,000 to $105,000. You gained $5,000 of equity in that home. Okay, and you only had to spend $3,000 to get $5,000 that first year.
Nice.
The year after that, if it goes up another $5,000, now you've made $10,000. We call that leverage.
Yes.
You're using our money, $97,000 of the $100,000, and you're only using $3,000 of your own to earn $5,000 a year.
Can't beat that.
Okay. No other investment that I know of. Yeah, we have seen some fluctuations. Back in 2008, 2009, we saw the market crumble a little bit, where home values went down by about 20%. Okay, in some areas. More in Florida's, more on the coast, California, and things like that. Got hit really hard. But so that was an arbitration. That didn't happen. That's the right word. That doesn't normally happen. Home values usually go up. There's certain pockets where they'll go up 3 to 5% a year. In Columbus here, there's certain neighborhoods that have gone up 19, 10, 15, 19% a year.
Definitely. So and that's where you really want to, there's certain areas you definitely want to live in. But some people live in certain areas just based on the appreciation value. And that's when you kind of, work with your realtor and say, hey, what neighborhoods are appreciating faster than others? Especially if your timeline is, under, so I want to move in a house and I only want to stay there for 5 years. Maybe you want to get into an area that's appreciating at a faster pace. But if you want to find your forever home, then maybe you have a little bit more flexibility in where you're going to locate yourself. And that kind of just goes into how are you knowing you're getting a good price for a
Right,
home?
right, yes. Tell us about that. When a consumer comes to you and they say, "Where should I buy?" Okay, they ask me that question all the time, and I can't really answer that question.
Yeah.
I sit in an office and I look at numbers all day long with our borrowers, but it all goes back to the data, right? These
Yep.
are easy things that you can look up: crime statistics, appreciation, school systems,
Yep.
things like that. So talk a little bit about that. How do they know they're getting a good deal when they buy a house?
Yeah. So this is where you're really going to. This is where realtors come in, and we're kind of like your biggest asset in knowing if you are paying the right price for a home.
Mm-hmm.
So you find a house, you really like it.
Yep.
You want to know, okay, realtor, is this a good price?
Right.
So what we usually do is we'll pull comps.
What's a comp?
So a comp is basically a comparable to the house that you're looking at.
Okay.
So if your house that you're looking at is 3 bedrooms, 2 baths,
Okay.
finished basement,
Mm-hmm.
I'm going to find that same house in that same neighborhood.
Okay.
3 bedrooms, 2 baths, finished basement, within the same price range.
Okay.
Usually in a fast market like this is,
Yeah.
it's going to be about 6 months back, and that's about it. Now,
Okay.
if you're in a in a farm kind of area, if you're in a rural area, maybe we'll go a year back.
Okay.
Sometimes, you need to just go a little bit further. Or we might change the distance. So it might not be that exact area. Maybe it'll be about 5 miles out.
Okay.
So sometimes the comparables are a little bit different.
Okay.
And the realtor will know how far they should be pulling from.
Okay.
Because they should be, they should know the area well enough
Okay.
to know to do that. So we're going to run the comps.
Okay.
Realtors are going to suggest a price to you.
Mm-hmm.
It's going to be based on their knowledge and how the market moves.
Okay.
Now, and also obviously the comps.
Yeah.
Ultimately, it's going to be up to the buyer to figure out what they're willing to pay for the home.
Sure.
Realtor suggests a price. So let's just say 200,000 is the listed price. Okay, I think that's a good price. 200,000 sounds about right.
Yeah.
The buyer says, I really only want to do 195 on the house.
Okay.
Fine.
Sure.
That's what you're comfortable with.
Right. Yeah. Yeah.
If it's not a multiple offer situation, let's go for it.
Okay. Yeah.
So 195, that's what you think the value is. Now the lender is going to come in and the appraiser is going to come in.
Right.
You're going to get the house appraised, and the appraiser is going to say, okay, yes or no, I agree. This is at 195,
right.
Or it could come in lower.
Sure.
It could come in higher.
Right.
The lender is only going to approve what the appraiser says.
Right.
And lend on what the appraiser says. So that's why it's really important to just make sure you are kind of going in line with what the realtor is suggesting.
Right.
Suggesting.
Yeah.
You don't want to go too far above.
Yeah.
If you really don't have the means to support going over a list price.
Because what if it doesn't appraise?
What if it doesn't appraise?
Right.
Basically, if it doesn't appraise, depending on how your contract is written, you may have to cover the difference.
Right.
In with cash.
Mm-hmm.
And usually, that falls on the buyer.
Right. Yeah.
But again, you can protect yourself in different kind of ways in the way that the contract is written. But yeah, so you want to kind of stay. This goes back in line with what's your end goal for the home.
Okay.
Are you going to be there for 5 years or less? Because if so, let's keep it tight. Let's keep your offer really close to what the comparables are saying.
Okay.
If you're going to make this your forever home, then maybe you have a little bit of wiggle room to kind of go above, what you might think it's really worth if this is the house that you really want.
Right. Right.
So there's a lot of different strategies in coming up with the price, but ultimately you're going to want to rely on your realtor.
Okay.
This is really why we're there.
And again, they're not paying you because you're being paid by the sellers. So a house that's been on the market for 3 or 4 or 5 months, you might have more negotiating power than one that came on the market yesterday.
That's a good point. Yes.
And there are 5 other people looking at the house on the open house day.
Yes. So that kind of goes back to different sides of town too. So say, for example, you're in Hilliard or maybe in Dublin, and you're looking at a house that's at $200,000.
Okay.
Everyone else is looking at that house.
Sure.
So there's going to be a lot of showings. There's going to be a lot of offers, generally speaking, if it's in pretty good condition.
Yeah.
So you're going to kind of have to go in swinging. A lot of times.
Yeah.
Now, if you're in Middlesbrough and you're looking at a house that's 200,000, Middlesbrough is still a really nice area.
Right.
It's just that it moves a little slower.
Okay.
The house might stay in the market a little bit longer.
Okay.
You might have a little bit more time and a little bit more power to negotiate there.
Okay.
So yeah, the longer the house sits, the more negotiating power you have.
What are some of the things that consumers look at when they decide to buy a house in an area? school districts, right? What are some of the other things that's one of the big things right there?
That's
obviously,
probably the
school.
biggest one. School
Okay.
district, location,
Okay.
walkability.
Like close to other restaurants and,
That's
grocery
becoming
stores.
huge right now, especially with millennials,
Mm-hmm.
because a lot of people, they want to be able to walk to the things that they like or bike to
Bars.
Bars, yeah, restaurants, exactly, parks.
Okay.
So yeah, it's always, that saying location, location, location.
Yeah.
It's probably the biggest one.
Okay.
And then also I'm noticing a lot of people are very, very interested in sellability. They want to know that like when they're buying their home, can they sell it?
Yeah.
And it's very smart because I don't think a lot of people were thinking like that before.
Sure, right.
So maybe that house is really, really unique. But is your taste so unique that no one else is really going to like it and it's going to be hard for you to sell?
Right, exactly.
So that's sometimes another thing to consider. That house has been sitting on the market for, a very, very long time.
Yeah.
Is it because it's too over the top, and it's not standard enough? You need to know that that's going to be like a forever home for you.
Sure.
Potentially.
A log cabin.
A log cabin.
House with a pool. Things like that.
Yeah, exactly. Or, buying a 2-bedroom in a neighborhood that's predominantly 3 bedrooms.
Okay.
That's going to be a little bit harder for you to sell.
Don't they always say you want to buy the cheapest house in the neighborhood? Not the most expensive. Is that accurate?
Yeah, fairly close to it.
Okay.
I would say so.
Okay. Yeah.
I would say so. Yeah, you don't have to buy the cheapest one, but at least like where it's comparable.
Yeah.
Nothing that's like over the top.
If it's the most expensive one, you want to make sure you're going to be there a long time.
Exactly. Yes, so. Exactly. I agree with that. So.
Oh, good.
Now we talked about, how are we getting a good price? And the whole thing, this is, the cost of waiting.
Yeah.
What are some of the benefits of buying versus renting on the financial side of things?
Great. That's a great question. So we haven't talked about that yet. So from a financial piece, tax benefits.
Yep.
Okay. So when you rent, you have no tax benefits whatsoever. You don't get to write anything off on your taxes at the end of the year when you do them for the federal government.
Yep.
When you own a home, you get to write off your mortgage interest. So let's say you buy a house for $200,000 at a 5% interest rate. You're paying $10,000 of interest on your mortgage. Okay, that's money that you can deduct from your income for federal income tax purposes.
Yeah.
So at the end of the year, when you do your taxes, instead of getting $1,000 back, you may get $2,000 back. Okay, money in your pocket.
Nice.
So that's a big benefit right there.
Definitely.
Okay, having that, you can write off your property taxes and you can write off your mortgage interest. It's a huge benefit. Now, they've been making some changes to the tax law here as of late. It's about a book that's this thick, and I haven't read through the whole book yet. So again, I'm not an accountant or a CPA.
Yeah.
So I have to tell you that legally that could change down the road. Who knows?
Yeah.
But that's one benefit. Another benefit would be the appreciation.
Yeah.
Okay? That same home next year that you bought this year of $100,000 is going to be worth $105,000. You just made $5,000 without having to do anything except maintain your home, pay your mortgage on time, mow your yard, snow plow and things like that. So that's pretty easy money right there.
It is. And you can use your equity in your home for so many different things, right? You can use the equity in your home to make repairs in your home.
Yeah.
Or as leverage for buying other properties.
Yeah, that's true. Take the money out. So that's on the financial side. How about on the psychological side? What are some benefits of owning a home?
Yeah, so I think the main thing of buying a home is the milestone, right? A lot of times people have, you want to get married, you want to have kids, and this is not everybody's dream.
Sure.
But buying a home is definitely a big milestone because you know that you worked for it, you were diligent.
Yeah.
You kept your credit up to a certain point, you had money in the bank, to buy the home and to be a responsible adult.
Right.
And to build a life for it, if it's just you or your family. So I think that's like just the pride of ownership.
Sure, yeah.
And just kind of knowing that, you walk in and it's yours. You can do whatever you want.
Yeah.
You can do whatever you want with it. You can change the countertops, you can change the floor.
Right.
You can have the blinds however you want. You don't have to really care about what the neighbors are saying.
Yeah.
So yeah, I think it's just on a psychological standpoint, it's just a big milestone.
Yeah.
Something to show that you've kind of achieved.
Yeah.
I guess the American dream.
Part of
the American dream.
Yeah. Pride of home ownership, they call that.
Definitely.
Now, a little different with condos, right? With condos, you're sort of limited on what you can do.
You are.
Especially to the outside.
Yes. So there are, with condos, you have the HOA.
Yeah.
And I mean, I was just kind of talking about this today with one of my clients. So
Yeah.
you may or may not be able to change the siding
Right.
or the windows or cut your grass in a certain way, or
Mhm.
you know, it's not to say that you won't be able to, but those are some of the things you want to look out for when
Yeah.
you're looking into condos. Because
Yeah.
I know a lot of people like the idea of condos because you don't have the big yard.
Right.
And it's just like it seems more stress free. So some people would rather pay more
Yeah.
with condo fees to not have to take care of a yard and
Right.
trim trees and do their siding or something
Yeah.
like that.
Yeah.
So that's a good balance, honestly,
Yeah.
sometimes for people to transition into home ownership.
Sure. Yeah.
You know, renting to condo life to then maybe a single family.
We see a lot of millennials doing that. They want to
Mhm.
live downtown in the condos,
Yep.
and then they sort of get sick of that after a while, and they want to
Mhm.
be out in the area, you know, out
Yep.
further out with their own backyard that they can mow. And
Mhm.
mowing your lawn is really good exercise,
It is.
and it's peaceful, right? I
It
love
is.
mowing my own yard.
Yeah, I agree. Landscaping, not so much.
Yeah, that's really, really good exercise right there. Yeah.
Yeah.
So
Okay, got some questions over here.
yeah, so let's and remember again, we want you to stay till the end, and we're gonna have that free offer for you at the end. So it looks like Darren was asking the question. Let's see here, how long does a pre-approval last? So that's a great question.
Mhm.
So a lot can change in a period of 30 or 60 days. So generally speaking, each lender has different requirements, but our requirement would be 60 days. So pre-approval is going to be active for 60 days. Your credit can change in 60 days.
Mhm.
You could lose a job, you could gain a job, you could open up new credit, get a pay raise. There's a lot that can happen in that period of time. So
Yep.
what we encourage our borrowers to do is just stay in contact with us as we stay in contact with them.
Mhm.
If anything changes, we make sure that they don't go out and get any new credit. Okay?
Yeah.
Buy that big screen TV before they buy the house or the new car, things like that. So we encourage them to call us if anything changes in their situation, and to keep sending us their pay stubs and things like that, so we don't have to keep coming back to them.
Yeah.
So generally speaking, about 60 days.
Yeah, and
Mhm.
something to add on to that is that once you get in a contract on a home,
Yeah.
you really want to avoid buying a new car
Yeah.
or purchasing furniture.
Yep.
Because you can ruin your pre-approval status at
Yeah.
that point, or your loan application.
Yeah.
Because basically the pre-approval is
Mhm.
it's taking all of your finances that you have right now,
Yeah.
right, and then
Mhm.
pre-approving you based on your debt to income ratio.
Right.
So if you go and buy a $30,000 car,
Yeah.
you know, might not be a good idea. You could actually jeopardize your contract, and I've had
Sure.
that happen.
Oh yeah. Yep. Exactly. It looks like Tori is asking about the process itself. How long does it take to close? So I'm assuming that Tori's talking about once they're under contract on a house, how long does that period take?
Mhm.
If we take it a step back, the pre-approval itself really shouldn't take that long.
Yeah.
Once we have our clients' information, once we've run their credit, received their pay stubs, W-2s, and those things, it typically takes less than 24 hours to get them fully pre-approved.
Mhm.
The long part is when they're out there looking at houses, negotiating offers. But once they're under contract on a home,
Mhm.
okay, what's that time frame look like?
Yeah, it's going to depend on the loan that you get. So, like Tim said, you know, the part of looking for the home is
Mhm.
going to be, it can or cannot be the longest part.
Right.
Sometimes people go in their first home and they'll love it and they'll want to write a contract on it, and that's totally fine. And people take a little bit longer.
Okay.
But once you're in the contract, it's generally going to take you about 30 to 45 days to close.
Okay.
And really, what that's about is the lender is going to make sure that everything you kind of told them up front is now being proven in paperwork.
Verifying everything.
Yeah. So W-2s, taxes, all that stuff,
Yep.
right?
Mm-hmm.
And then on the real estate side of it, we're going to be doing inspections. We're going to be getting the appraisal done. We're going to be doing requests to remedies, which is basically where you're asking the sellers to make any repairs.
Okay.
The sellers are going to be making repairs.
Yeah.
And so all of that takes about 30 to 45 days.
Title work too. We want to make
Title
sure that
work.
the seller can actually sell the house.
Exactly.
That they don't have a mortgage that's more than what they're selling it for.
Exactly.
So that title work can take a little bit of time as well. So there's a lot that goes into it. It's not like buying a car where you walk in, you walk out with the car that same day.
Mm-hmm.
Right.
The good thing about it though is that when do you actually receive your first mortgage payment?
You always miss a month. You always skip a month. So if you were to close on a house here today, October 21st, you wouldn't have a mortgage payment due until December 1st. You always skip the next month.
Yeah. And so that kind of gives a lot of my clients feel relief in that, because you're paying so much money up front.
Yeah.
You know, you're paying for your inspection. which it can vary, but usually it's around 350 or more. You're paying for your appraisal and things like that. So being able to skip a month of mortgage payments just kind of gives you a little bit of a breather.
Sure, yeah.
So that's just something that most people don't know about.
Yeah, especially if it's going to take you maybe a week or 2 weeks to move into the house because you want to paint and carpet and things like that ahead of time. It gives you that little bit of a breather. So yeah, good.
Yep.
Good. Rachel is asking, let me read this here. Rachel is asking about getting out of a contract. When can she get out of a contract? So I'm assuming maybe she's talking about home inspections or things like that. So a contract is a contract, right? You're signing an agreement to buy somebody's house.
Yep.
There's certain periods of time where you can get out of that contract for certain things. So why don't you talk about that a little bit here?
Yeah. So when you write a contract, you want to make sure you're writing a contract to buy, right?
Right. Yeah.
It's a real life thing. It's written by lawyers. And so when you are, putting in an offer to buy a home, you're basically saying, I really do want to buy this house. However, there are some contingencies.
Okay.
So if when you're going through your inspection period and inspection does not go the way as planned, something comes up with mold, something comes up with foundation issues, something when you walk through the house, you couldn't see it. It wasn't very obvious.
Right.
And now, you're asking the sellers, can you take care of this?
Yeah.
And the sellers are either unable to or unwilling to.
Right.
That's a reason that you can actually get out of the contract.
That's why you do the home inspection, right? To see things that you perhaps missed.
Exactly. Yeah, you can't see everything. The naked eye just doesn't see everything. So yeah, the inspectors are definitely the experts in that area. Yeah. So, your realtor, when they're walking through with you, can point out a couple things that might come up on the inspection report.
Sure.
But overall, you're going to want to get a really thorough investigation of the house.
That's like a 2 to 3 hour period, that home inspection, isn't it? So
it is.
That's pretty darn thorough, right?
It's very thorough. And then the inspection report's about 40 pages.
Okay, yeah.
And if people get, a little bit nervous about that inspection report, but you will find things wrong with the home.
Sure.
You're buying used property.
Yeah.
So
even on a new property.
Even on new builds have issues sometimes.
Yeah.
So yeah, that's one way to get out of a contract if things aren't going as planned. There's another way that's through appraisal.
Yeah, if the appraisal doesn't come in at value.
Exactly. If it doesn't come in at the purchase price, depending on the way that we wrote the contract, there is a certain amount of time that you can actually walk away if the buyer and seller do not agree to a new purchase price.
Okay. So if it doesn't appraise for the sales price and the seller's not willing to come down, the buyer then can't get financing. So that's part of the financing contingency. If the buyer can't get financing because of appraisal or whatever, then they're out of the contract. And again, you're spending money on a home inspection, you're spending money on appraisal credit report, so you've got $1,000 into this property. You don't want you can't take that lightly for sure. For sure.
And the other way that you can get out of a contract is simply by getting cold feet and walking away. Now, if you do that, there's a thing called earnest money that we put down at the beginning of a contract, generally speaking.
Yeah.
And that's like a good faith deposit. You know, the seller's taking their home off the market.
Yeah.
And they're hoping and praying, everybody's hoping and praying everything goes smoothly.
Right, yeah.
But sometimes buyers find other houses that they like in the process, or they get buyer's remorse.
Sure.
And when that happens, yes, you can technically get out of the contract. Now, you could also be sued.
Right.
But most likely you'll just lose your earnest money deposit, which generally is around $500 to $1,000 on average.
Okay.
Some people do put a little bit more.
Okay.
But if you're looking at a house less than $300,000, that's probably where you'll stay.
Okay. That's why it's important when you sit down with them to find out what their why is. Are they just looky lures, or are they really want to buy a house?
Exactly.
I've seen specific performance is what you were talking about, to where if you just want to get out of a contract for no reason, the sellers can actually sue you for specific performance to make you buy your house.
Yep.
I'm not sure I've ever seen it actually gone that far, but that's out there. So you got to be careful.
It exists.
Yeah, exactly. Well, I think I don't see any more questions unless some of you have any more questions. You want to put it in the chat box. We've been on this call for almost an hour.
Yeah.
I told you it would fly by.
It did fly by.
And I appreciate you guys, Rachel, Darren, Tori. I appreciate you putting those questions in the chat box. But hey, we told you that if you do stay till the end, that there's going to be a special offer for you. So what we've talked about doing is giving you a free appraisal on your house. So and that's a value of like $425.
Yep.
So
It makes a difference, every little bit
yeah,
helps.
yeah. So if you guys want to, if you buy a house this year from us or even next year from us, use Keira as your realtor and me as your on the lending side with one of these first-time homebuyer programs. We'll give you a free appraisal. What I need you to do is text me. My number is I'm going to give you my number. So hopefully you have a pen and paper there with you. My text number is 330-990-5749. I'm going to say that one more time. 330-990-5749. All I want you to do is text the word free. Then I'll text you back for your email address so I know who you are, and then I'll make a note that when you do start looking at houses and get pre-approved with us, we'll make a note in your file that you will get a free appraisal. So I
Nice.
think that's pretty good.
Yeah, it is.
Um,
I think we're good.
I think we want you to share this.
Yeah.
So after this, you're going to get a recording of this webinar. So we definitely want you to share this with your friends and family. Anybody that you know that's looking to buy a house in the next year or even after that, please share this on your social media platforms, Facebook, Instagram.
Yeah.
Okay, you're younger than me. You know about all these things.
A little bit.
So please share this out there. Hey, let us know if you have any questions as well, and we'll keep in touch with you. And we're gonna do some more of these, right? We're gonna answer some more questions. There's a lot that we didn't cover today.
Yes, it's just a lot in the home buying process that can't really be summed up in an hour, especially between realtor and lender.
Yeah.
But we tried to, answer the key things.
Yeah.
So, like we said, if you have any questions that we didn't get to today, please contact us. We'll be reaching out to you, and then we will be doing some additional seminars or webinars where we'll break things down even further.
Yeah, maybe in shorter chunks. Home inspection.
Yeah.
Credit scores. We'll break it down and do some things like that, and put this on our YouTube channel as well.
Yeah.
So
I like it. Thanks so much for coming, guys.
All right. Have a great rest of your day. See ya.